She also is pretty interested in this whole reputational risk area. And I'm
Yeah.
curious about it too, because as you laid out, reputational risk is a very fuzzy area. And,
You
like
don't say.
what creates reputational risk? I remember digging into this with cannabis, actually, right? Where it
Yeah.
was like, should you bank the cannabis industry? And it's like, well, it's, legal on a state level, so why not? And regulators are like, well, because, plausibly it might make certain people nervous. And if it made certain people nervous, maybe that would harm your reputation. And if that harmed your reputation sufficiently, then that might cause depositors to be nervous. And if depositors or investors were nervous, that might impact your safety and soundness. And so, like, you can draw a line
Yeah.
from certain activities to safety and soundness via this like reputational risk bridge, but it's pretty tenuous and
Mm-hmm.
pretty uncertain. And I think a point that people who are critical of this bring up is, aren't banks, executives, and boards of directors better positioned to judge the reputational risk of going into a particular business area than regulators at a 30,000 foot level who don't have a good sense of the business or
Right.
the relationship between the bank and its customers? Like, I think that's a very, very good argument to make. And
Mm-hmm.
in this particular case, I mean, it is kind of interesting that it was the NRA that took this to court rather than the bank acting on their behalf. But I definitely see a lot of room for legal pushback on this reputational risk. This feels like an area where regulators are maybe overstepping their bounds a bit.
Yeah, and it's interesting too because, we talk a lot about like, what kind of banking industry do we want to have and who should get banking access and how should they get banking access?
Yeah.
I think one thing that's really interesting from maybe like a social perspective is
Yeah.
the values that we ascribe to different institutions. So we know that climate risk is being flagged by regulators in part because losses, you can get losses from climate events, like credit losses from climate events. So there is like a financial risk there. So does it therefore follow that, climate risk is something that banks should consider from a reputational perspective? I also think what's interesting too is that some of these borrowers or some of these industries that might be good credit risks are not popular with certain parts of the population.
Yeah.
And so the question is like, if the person is good for the money and they're a good customer, does it matter that maybe our employees don't ideologically like this business? Or does it matter that this manufacturer has been tied to things that are bad in the news?
Right.
And if it doesn't impact their ability to pay back their loans, is this something that we as a bank should care about? And I think that answer will be different for every single bank. But it's just really interesting too, because then it's like, and also different banks can have different risk tolerances. So
it
is really interesting to think about the regulator's role here.
Yeah, no, it really is. I mean, I totally agree with that. I think I come down on the side personally of this should be left to banks on an individual basis, right? Like, it's a free market thing. I mean, capitalism, Kiah, this is me being pro-capitalism.
It's one time.
Right? Yeah. So pro-capitalism, Alex, I think would say that in this particular case, to your point, if there's a bank where they're like, look, we don't really want to bank the gun industry, the gun manufacturing industry, fine. Like, your employees aren't here for it. The executive team doesn't want to do it. That's fine. But like, if enough other banks don't feel that way, or if a bunch of them do feel that way, there's going to be a market opportunity for someone to come in and get pretty good business, probably at better pricing by doing that. And capitalism will sort of sort that out. But I at a regulatory level, absent Congress, who doesn't tend to do much, absent like a law prohibiting it, which is something that runs through sort of our regular democratic process, I'm not a big fan of regulators putting their fingers on the scale and going, we just don't think this entire industry should be banked. I mean, I tend to view banking from a regulatory perspective much more as a utility, which is to say, like, in the same way that
hot take.
in the same way that you have electricity or water, or even like, this sometimes comes up with like cloud computing, like, should AWS provide services to this industry or this industry, that kind of thing. I kind of think infrastructure at all of those different levels should sort of be available to everyone who can pay. And it's up to other people up the chain from that to determine which industries we allow and not. So anyway, I think this is overall probably a good development and probably something we're going to see more examples of pushback on. I do wonder a little bit if we always joke about like in fintech, like the era of zero interest rate policy, ZIRP. I kind of wonder if like the ESG reputational risk pushing back on certain industries thing, like I wonder if that was the regulatory equivalent of like a ZIRP era phenomenon that we're kind of like coming out the other side of, because it does
Yeah.
seem like it was concentrated during those same years. And now as practicality has sort of set back in, everyone's kind of like, yeah, let's just bank everyone who are legally left.